Hi everyone, so let's take a look at fiscal policy and the way this can be used to combat inequality. Right, so first thing to note and be aware of is the use of progressive income taxes within the UK economy. Now, we see these levied at 20%, 40%, 45% rates respectively. With the first £11,500, that is of course free of any income tax there, but thereafter up to about £32,000 or so, you will face a 20% rate of tax on earnings between 11,500 and 32,000. Thereafter, beyond 32,000, those additional earnings, the additional pounds you make, every additional pound you make beyond that £32,000 threshold will then be taxed at a 40% rate. Now, each of these is a higher marginal tax rate, so it means that the earnings beyond that threshold get taxed at that additional rate. Now, this is done deliberately so that it does not disrupt incentives, because otherwise you'd have an incentive to earn less than say for instance £33,000 if that meant that all of your earnings were then subject to a 40% rate of tax. So that is deliberately not the case because of the impact that would have on incentives within the economy. Okay, finally we've got that 45% higher marginal tax rate, and that is for any earnings above that £150,000 mark per year. Okay, so there's three reasons why this is used really. The first one is the attempt to reduce inequality and of course fund those transfer payments in the form of welfare payments to the unemployed, the sick, the disabled and so on. So this progressive rate of taxation deliberately does transfer earnings to those most in need in society. Okay, moreover, it also helps to incentivise low paid work. So if you know you're not going to face any income tax on that first £11,500, then of course you face no reason not to actually go out and work if you were able to do so. And of course the role of unemployment benefits and a potential unemployment trap where people would rather just receive job seekers allowance is of course something else to consider when it comes to incentives there, and making sure that is below what is potentially available within low paid work. Okay, thirdly, it's also about the recognition of diminishing marginal utility of income. Now, Richard Thaler, the behavioural economist, has done some work investigating this and investigating the fact that when you earn more, that additional increase in your income means far, far less than if you are a lower rate payer of taxation, perhaps. Okay, so the less well off you are, the more important those additional earnings actually are for you, and that makes perfect sense. Okay, so secondly, let's have a look at stamp duty. Well, a recent development within the stamp duty world is the fact that when it comes to buying your first house, there is now relief for first-time buyers up to a threshold of £300,000. So, of course, with increases in the property market, this has really been fueling intergenerational inequality. And now, of course, that has been corrected there by this decision taken by the Conservative government to support first-time buyers, and the fact that they already need to raise a very large deposit, so they do get that additional support, and that really reflects the fact that house prices have increased markedly way beyond this previous threshold of 0%, which was from 0 to £125,000. Okay, so then at a margin between 125,000 and 250,000, we can see that the rate increases to 2%. It then goes from 250 to £925,000 at a rate of 5%, and thereafter it becomes 10%. Beyond £1.5 million, it then becomes 12%. So this rate of taxation really does increase. This, of course, being targeted directly on those house purchases. I do have slight concerns, of course, with stamp duty. It can cause labour and factor immobility because people are less willing to actually move from different geographical regions because the cost of buying and selling homes is made more expensive by this process. It can also slow down that velocity of money as well because money is taken out of the circular flow of income, and it's going to take some while before it actually is re-injected into the economy. And of course, the first thing you want to do when you buy a new house is buy complementary goods such as curtains, carpets, etc. And it may well inhibit that purchasing process. So I do have slight concerns and reservations when it comes to stamp duty. Okay, then we've got capital gains tax. Well, capital gains tax, you are given a tax-free allowance. That tax-free allowance is up to about £11,000. So if you're only making relatively small capital gains tax claims on your self-certification, then perhaps you won't face any tax here. But if you are selling a house, then you will be taxed. If you're a higher rate taxpayer at 28%, if you're a lower rate taxpayer at 20%. But these boundaries start at 10%. So if you've owned a great deal of shares and you've sold those shares at a big profit and you're a lower rate taxpayer, then you'll be taxed just 10%. So yes, they do use a flexible approach there. So it's another interesting one to consider. Then, of course, when it comes to fiscal policy, we've got to consider these transfer payments. And really, should the transfer payments be focused on in-work benefits rather than welfare payments? Well, this is a difficult one. Of course, there's been a lot of controversy in moving to a means-tested system for welfare payments. Means testing, of course, meaning that you are testing those people's abilities to actually engage in economic activity, that is work. And of course that is quite controversial and yeah, is real scrutiny for those individuals who might not be in a good place anyway. Okay, but nevertheless, these welfare payments do help to actually support the most vulnerable in society. Is there the potential to possibly move to further work-related benefits? It's a difficult one, but nevertheless that has been a key focus because having in-work benefits once again ensures that incentives are right to actually reward people that are working hard. Okay, finally we've got indirect taxation. Well, indirect taxation is much criticised as being highly regressive. But, of course, there are exemptions on there. Now, we've seen in a previous lesson that there are exemptions allowed when it comes to VAT on essential items. But what's also worth noting there is that the most affluent in society will also benefit from those actual exemptions. Okay, so that's another interesting area to consider there. There's also, of course, the argument that council tax rates should be increased on the most valuable properties and that those values should be updated from, I think it's the 1991 values that were originally taken when council tax rates were actually determined. Okay, so that could be another area that you could explore on any essay that comes up on fiscal policy and inequality. Okay, so evaluative points. Right, so first one is inequality really a problem? And if so, why? So to what extent is it really a problem? Is it because inequality is really increasing? What problems do we notice in society being caused by inequality? So why, therefore, does it really need tackling? Just posing these questions really shows an originality of thought, that you're not just taking the question at face value, but you're really going into detail about it and thinking in a more holistic way. Okay. Are there supply-side policy alternatives that could be used? Perhaps one of the causes of inequality could be a monopsony employer. If it's a monopsony employer, is there any way that supply-side policies could deregulate the marketplace and allow for more competition so that the labour market becomes more perfectly competitive, perhaps. The success really of any of these policies really depends upon the identification of the correct cause of inequality. So again, that's something to really focus on here. And of course, we have seen big problems when it comes to the housing market and unaffordability issues, together with difficulties of actually accessing sufficient finance from lenders there. Okay, so yeah, once again, addressing those specific causes is important. Why may progressive taxation fail to actually solve inequality? Okay, so why could this occur? If we think about these different levels here, you've got to think very, very carefully at which levels you're going to actually levy these rates of taxation so that you do not disrupt those incentives. If you disrupt those incentives, then people may actually think, do you know what, I'm better off just collecting job seekers allowance perhaps. Okay, so yeah, the final point that we've got here, is it easier to address inequality via fiscal policy when the economy is growing strongly and perhaps your fiscal finances are in a far better shape? Well, arguably it probably is. Okay, one of the most growth-friendly forms of taxation, though, is of course taxation on wealth. Okay, and we see that in relation to this point here about capital gains tax. So taxing wealth, and what we also said there about council tax, are often seen as the most growth-friendly options when it comes to fiscal policy. Okay, thanks guys.